Evening all, it's Jim here. Welcome to our latest AQA A-Level Business live revision session. Can you believe it's 4 or 5 days since paper 1? I'd completely forgotten all about paper 1 until somebody reminded me that we did a warm-up on Wednesday morning, and that for our paper 2 session we don't need to worry about things like inventory turnover and payables days because there's no finance in paper 2. But what luck was that with that the ratio spinner landing on payables days and inventory turnover every single one of our cinema workshops. That was amazing. Anyway, welcome if you're joining us live, and I do appreciate you taking some time during your half-term break. Hopefully you've had a chance to refresh and relax and get re-energized and start dipping back into some revision for paper 2, which I think is a week on Thursday, isn't it? So what we thought we'd do in this session is a quick sort of smorgasbord of revision of topics that are in the advanced information for paper 2, but no calculations at all in this session. And what I also thought we'd do is just literally spend a few minutes having a look at this 4-mark question format, which has started appearing and appeared in paper 2 in 2021, just to explain how to respond to that. So if that's all right with you, we'll do that. Great to see so many people here on the live chat. So as usual, a few activities on the screen. Please do enter your responses and your ideas, and of course any questions as we go into the live chat window. I'll try to leave a few minutes at the end. It's going to be about 40 minutes or so, 35-40 minutes. Try and leave a few minutes at the end to pick up any questions about paper 2 and also about upcoming live streams, because we're definitely going to be doing another warm-up probably the Wednesday night before Thursday morning, I think it is, isn't it? And we'll be doing some more sessions in particular over the next few days, looking at 16-mark open questions, which is an important part of paper 2, and also 9-mark questions, and also one on the calculations, because it's interesting. If you look at the quantitative skills that could be examined in paper 2, obviously we're not going to get any ratios, we're not going to get any averages, we're not going to get any fractions, so we're into percentage changes. We know that we are going to be asked to interpret PED and YED data, we know that's for sure, and also interpreting other graphical forms. So it could be, for example, inventory control charts could appear. So we'll look at those, not in this session though. We'll look at marketing type data, so market share, pie charts, that kind of stuff. So we'll do a session on the maths for paper 2. Superb stuff. Okay, right, well, let's enough of that intro. Let's go. I'll just unmute myself, shall I? Why not? So first task then is to give me 3 ways a public limited company can increase its market capitalization. Over to you. Yes, I realised I was muted about 20 seconds in, which for many of you is probably a blessing actually, but these things happen. And but thanks for letting me know in the live chat. I just picked up a couple of examples of great answers here coming into. Let's have a look. Some great. I've put that one there from Avenor about increasing profits, increasing dividends. What have we got here? That's a good one from Harish there. Issuing more shares, increasing profits. Yeah, superb stuff. Great. Another great example coming in here. Perform better financially, improve the financial performance and the prospects of a business. So it's a really good example of also, you can match this to stakeholder mapping. If you can develop really good relationships with key investors so that they understand your business, understand your opportunities better, then that's also a reason why your share price may improve. Superb stuff. So let's have a look, see what I came up with. I was just scribbling the answers down in a coffee shop this morning. Lots of different answers, aren't there, of course. Yeah, I went for issuing new shares, so a source of finance. I know there's no finance in paper 2, but issuing new shares is one way to grow market capitalizations. It could be given a case of the business where you've got some share price information, increasing dividends paid to shareholders. But generally, it's about growth, isn't it? Can you build a growth story? Can you grow profits? Can you build excitement about a business? That's often perhaps the best way to achieve an increase in share price and therefore in market capitalization. Superb stuff. Right, we've got over the sound issues and we're on to another topic here, also on the advanced information. And this one is asking you to give me benefits of using secondary research over primary research. So comparing the two. So what are the advantages or benefits of using secondary research over primary? Picked up some great responses. I mean, there's 300 plus people in the live chat tonight, so I'll try to showcase a nice selection of responses. Harry was first in there with some good benefits of secondary over primary. What else have we got here? Let's see, who else have we got here? Actually, I think Natasha's got this spot on there. Easier to access, easier to gather, cheaper, quicker, faster, more accessible. Val's gone for more accessible. Less time consuming, says Zoe. And yeah, Lucy's made a great point about how secondary data is often already there. It's been collected for a different purpose, perhaps, of course, because it's not primary, but therefore more efficient. Superb stuff. Love those responses. What did I go with? Let's have a look. So I'm having to use all the buttons here, which part explains why I was muted at the start of the first exercise. Not really an excuse, isn't it? Speed. Lots of people in the live chat have gone for speed as being a key benefit, and that is the case. I mean, I know you can do primary research instantly by asking people or by setting up an online form on a social media platform. Of course you can, but in general, primary research needs to be well planned and thought through, and sometimes takes quite a while to firstly gather and then secondly to analyse. Secondary research, don't forget, that can also be internal to the business. So, for example, it could be sales data. It's not just always external, but often if it is external, it's been well thought through, well checked, often by specialist providers, and actually can often be quite cheap. You know, £1,000 for a really detailed market research report is nothing compared with the time it would take you to produce it yourself. So superb stuff. Well done. On top of secondary research, let's stick with the marketing theme now. This is an area that's not really been examined, well, at all actually, in digital marketing, but also the area of promotion hasn't been widely examined so far. So let's just spend a minute or two looking at this. So advantages, please, of digital marketing. We're talking email marketing, pay-per-click advertising, compared with traditional methods of promotion, such as TV advertising, radio, print, and that kind of stuff. Over to you. Oops. Let's go again, shall we? Hang on. I'm not going to show the answers. I'm going to give you a chance to have a go. We need a professional in here, don't we? For some reason, PowerPoint's not playing ball with me. Yeah, so let's have a look. What did I go with? Well, before I go through what I went with, let's just pick out some responses in the live chat. Rosie's said quicker, instant feedback. Let's pick out James's contribution now. That looks good. It's this idea of reaching either quite a wide variety or even targeting specific demographics. It could be demographics, but it could also be geographical, really help with geographical segmentation. These are, I would say, better answers than mine. So I'm sorry I put mine on the screen so early. Kirsty's gone with a cost argument. Firms can run their own social media page, therefore use that to gain a relatively cheap, if not free, access to target consumers. What else have we got here? Let's have a look. Oh, this is a great response from Sochi. Welcome back, Sochi, by the way. Digital marketing making a really nice link to this idea of data mining. So it's all about targeting, generating a lot of data. The marketing is taking place all of the time. It's always available, but it's the ability to be able to then tap into and analyze that data that's been gathered. And of course, the big thing about digital marketing is all the tools are there for even very small and new businesses as well as large businesses to be able to take advantage of that. So if you look at the likes of the Instagram advertising platform, Facebook, TikTok, YouTube, all the same, those advertising campaigns, Google Ads, they are incredibly sophisticated, but they are basically available and very accessible to every type of business. So it sort of makes the playing field a bit leveler. What did I go with? I went with the segmentation argument here, that it's more effective than traditional means. And particularly if you're trying to target a particular demographic, so age, for example, maybe trying to target your age group or my age group. Geographical segmentation, the ability to be able to use very precise geographical targeting, even down to within half a kilometre of where you want to target. And also it is generally lower cost. And it's quite an interesting thing is that normally with digital marketing, you're setting a budget, and what you normally do is test to see how it works, and then if it works you do more of it. Whereas with traditional marketing, you have to throw quite a lot of money to see whether it works at all, and you're not able to track whether it's been effective. So digital marketing could come up. I don't know, in the context perhaps of a business that's trying to reach maybe a new target audience, perhaps is looking at a major promotional campaign using digital marketing. I could certainly see that being the basis for perhaps a 9-mark question, or maybe even a 16-mark decision question, should they go ahead with a particular type of campaign. So hopefully that's useful. Now, just before we move on to the next activity, just a quick bit of revision on correlation. I was thinking this morning, what topics could come up that might throw some students in paper 2 that think, I wish I'd revised that, but I wasn't quite sure what it was. I've got 2 or 3 coming up in the next few minutes, one of which is this idea of correlation. So, for example, we know in paper 2 you could be asked to interpret graphical forms, data presented in a certain way. And one of those things could be some kind of appendix with a chart or some kind of diagram that shows an attempt to correlate a dependent and an independent variable, perhaps in support of, perhaps as a result of some market research. So we need to be aware of this concept of correlation, what it's about. The basic idea with correlation is there a relationship between what's known as the independent variable, and the independent variable causes something else to change. That's known as the dependent variable. And if there is a relationship, what type of relationship is it? So, for example, with positive correlation, if the independent variable increases, then also there is a corresponding increase in the dependent variable. Flip that round, negative, if the independent variable falls, there is an increase in the dependent variable. Or is there no relationship whatsoever? So just with that in mind, that scatter chart there shows some data points, and it also shows a thing called the line of best fit, which is basically a statistical method of trying to work out, is there a strength of relationship between those data points. And what does that show? If you were to type into the live chat there, what does that show in terms of, firstly, is it positive, negative, or no correlation, and is it strong or weak? What do you think? What does that chart show? Hannah's gone for weak positive. Callum's going for positive, but how strong is that relationship, do you think? Isabel's saying positive and strong. Yeah, and Sochi's going strong positive. I think on balance, we'd actually need to see the correlation coefficient given to us, which of course isn't part of the spec. On balance, I would say that's pretty strong. It appears in most of those data points they differ in terms of their distance from the line of best fit. But I would say in general, that looks to me like a reasonably strong but positive correlation. Hamdeen saying neither weak or strong, somewhere in between, but it's definitely not weak. Okay, with that in mind, that was just a bit of revision on correlation. Anyway, I've got a task for you. You'd be pleased to hear. So can you please give me, and I've given you one there, higher advertising leads to higher sales or higher orders. But of course, correlation isn't just about marketing. There are other ways in which things can be positively correlated. So over to you. Can you give me 3 examples, or just give me one example in a different context of positive correlation? Just stick some great examples on the screen there from contributions coming into the live chat. Fantastic. Yeah, it's quite interesting how there are actually, if you think about it, quite a few examples of positive correlation, or in theory, positive correlation. So quite a few of you have gone for the classic ice cream example, and it's just a good example to remember this idea of dependent and independent variable. So the dependent variable is sales of ice cream, and I've said a long spell of hot weather. Ice cream sales apparently don't go up very much when there's just one hot day. It's when people get locked into thinking it's hot and it's going to get hotter and it's going to stay hot. That's when they start buying in ice cream in big quantities. But also you can also make a nice link between share price, as we did earlier, talking about market capitalization, and the growth level of maybe you can even say market share, but certainly growth of profits. But also, what about employee retention rate? So does the employee retention rate go up if you pay people more? Who knows? Maybe there's an argument for saying that in general you have a better retention rate if you pay more compared with the competition. I'd be interested to see some data for that, actually, wouldn't it, to see whether that's true. Good stuff. So hopefully that's useful. An example of positive correlation. Now let's just flip the stars here a little bit. We know for sure that sort of motivation, financial, non-financial methods of motivation is going to be examined in paper 2, because it's the one chunky part there of that part of the specification which is could be examined. So, and one of those motivational theorists, the 3 on the screen there, has not yet been examined as far as I can tell. The other 2 have a couple of times. But anyway, over to you. I've got a minute this time. I've listed 8 statements or 8 phrases that are linked to one of either Hertzberg, Taylor, both of whom were called Fred, or Abraham Maslow. So all you need to do in live chat is to say something like Taylor and then the number 1, 2, 3, or whatever. There are only 8, and there's 3 motivational theorists, so it's up to you to decide how they're categorized. Have a go. There we go. Lots of people having a go. Let's see how we got on with these. And it turned out that the 2 Freds, Freddie Hertzberg and Freddie Taylor, had 3 each, and poor old Abraham only had 2. But of course, there's more you could say about each of these 3 motivational theorists. Of the 3 there, the 2 that are closest really in terms of their perspective on motivation at work are Hertzberg and Maslow, because they've both focused around the broader issues of how employees treat employers treat employees, and all about the wider non-financial needs of people at work. So don't forget, Hertzberg basically identified factors. He called them hygiene factors that, if not present, could motivate people. And he also talked about the motivators, which tended to be non-financial, of course, didn't they? Which, for example, meaningful, interesting work is Hertzberg identified that as being a motivating factor. Old Freddie Taylor, he was from the old school. He was really all about efficiency and so-called scientific approach to management, which basically involved him watching people in a factory and trying to work out how he could get more units made by telling people what to do and training them in it and paying them per unit made. I paraphrase, but that's basically what he did, and often associated with autocratic leadership as well as being the outcomes from his suggestions as to how to motivate people. And good old Maslow, of course, with his hierarchy of needs. Those are the three named theorists on the specification. That's all you need to know. Maslow has not, as far as I can tell, been examined specifically. The other two have appeared, both in multiple choice questions and other questions too. So it would be worth just topping up your understanding of all three, but in particular Maslow. Excellent stuff. Right, let's just do a quick round of what's the difference. You might say, what's the point? Well, the point is that these topics could come up. They could be a knowledge gatekeeper, for example, and a 9-mark question where you need to know what it is in order to develop arguments, or an argument that is relevant to the question. So I've picked these deliberately to try to help you revise them very quickly tonight. But then also it may be that you spot something you think, well, I'm not quite sure about that. I just need to do a bit more revision. So here's our first one. Over to you. What's the difference between mass customization and producing to order? As we'll look thinking about that, yeah, Mayo is not specifically mentioned, but that's not to say you can't use Elton Mayo as a motivational theorist if it's relevant to the question. You can use Pink, you can use anyone you like, but you won't get a question on Mayo. Let's have a look. So what have we got here? Mawad is saying mass customization. It's the use of large scale production, but individually tailored to the needs and wants of the customer. Superb stuff. Ryan has made a similar point, just as valid, basically the same point. Mass customization, the ability to change the product to the customer's needs, but on a large scale. Superb stuff. What about producing to order then? How does that compare or contrast with producing to order? What do we think? Just looking through, there's so many great responses coming into the live chat, so I appreciate those. I'm going to go with Harish, but one of many correctly saying that producing to order is only producing when an order is placed. Doesn't necessarily mean it's going to be customized in any way. It's just, but you only make it when somebody's actually ordered it. Superb stuff. Okay, well, let's just have a quick look at what I came. I think it's quite an important distinction. I'll explain why in a second. So mass customization, as many people have mentioned in the live chat, is this idea of using mass production techniques, often linked to automation. Not that we want to go back to capital intensive, labor intensive, because it's not necessarily about capital intensity, but it's about using mass production techniques. But those techniques those processes enable individual customer needs to be accommodated. They make choices about color, size, dimensions, whatever. Producing to order is a step back. It's saying we only produce something when we have an order for something, and that order might require mass customization as part of what we produce, but not necessarily. So it could just be an order for 1 million widgets, none of which need customizing, but we'll only make them when we receive the order from the customer. So a best example of producing to order is you go into a restaurant and the chef hasn't tried to guess what you're going to make, has he or she? They wait for the order to be placed, and it could be that within that order, 10 people out of your group 11 want the standard menu item, but one person wants something a little bit different, or a couple of changes made to the menu. Therefore, that particular production technique can accommodate individual customer needs and wants. Therefore, there's an element of mass customization going on, but you only produce it once you've got the whole order. So that's good stuff. Hopefully that's now just on producing to order. The reason why I've done that on this session today is because it's one of the few hot topics left that's not yet been examined, as in it's a topic not yet examined but is in the advanced information. So producing to order, I think we just need to spend another minute or two on, just to make sure we've at least highlighted it as something to revise. So over to you. 2 advantages, please, of producing to order. Superb stuff. Yep. Just sticking a few with the responses. There are many responses in the live chat coming through, so well done on those. Let's have a look at the answer. Or sorry, not the answer. Two possible advantages of producing to order. And I could see this linked with a question around interpreting inventory control charts and that kind of stuff. You know, maybe a business is thinking about changing from one method of production to another. I don't know. Just anyway. It's a hot topic because it's not been examined properly at all, actually, and it's one of those things that if you don't know what it is, it might throw you. So producing to order, it's just you only make something when someone has requested it, not requested it, ordered it. Therefore, a big advantage of that is you don't need to keep lots of, in particular, inventory of finished goods, finished products in stock. Because why would you? Because you're waiting to find out what people actually want. And also this idea of customer satisfaction. Customers get what they want and typically when they want it. That's not necessarily that there aren't downsides to producing to order. Of course there are. However, because for example, waiting for an order to arrive, it may well be you've therefore got assets that aren't being used. Maybe capacity utilization falls. So good stuff. Producing to order. Hopefully that's useful. Just to go back onto, there was a question, let's see if I can find it here from, I think it was from Connor. And let's just put that on the screen. It's from Connor, yeah. Do we need to know the different types of mass customization? No, you don't. No, I think from memory, there are 4 different types, aren't there? But no, you don't. Just what it is and how it works, I think it will be enough. The 4 different types of mass customization aren't actually mentioned on the specification, so I would be very surprised if they asked a question on it. Okay, superb stuff. What have we got next? Another what's the difference? So let's have a look this time. What's the difference between, this is going back to our marketing section. If these came up, again, could be a nightmare for some students who maybe not completely on top of the spec. So what is the difference, please, between confidence intervals and extrapolation? Have a go at that one. Maybe if you know one of them. Whilst you're doing that, somebody's asking, is producing to order synonymous with lean production? Yeah, it's similar, isn't it? Because lean production is about trying to minimize the resources involved in production, and producing to order is one way of minimizing the amount invested in working capital tied up in, for example, inventories of finished goods. So it is linked. Yep. What have we got here? Let's pick a couple of examples of some great responses coming into the live chat there. Just about fits on the screen. Harry's saying extrapolation is predicting future trends based off current data or historic data. Confidence intervals is about how confident you are that your estimated value lies within 2 values, e.g. 95%. That's the typical one we use, don't we, to measure confidence, statistical confidence. Andrew's saying extrapolation is the past data to predict future trends. Confidence intervals is about probability. Not quite, not far off. Harry's going for the predicting future trends. Superb stuff. Shall we have a look? See what I came up with. Confidence intervals is really about how confident are you that the result from what you've got. Let's say it's a market research study, and it says that 80% of people would buy. 80% of people in our target market would buy a product at this price. Let's say that's what the primary research says. Well, clearly the primary research is probably based on a sample of some sort, isn't it? And your question as a marketeer or a marketing manager is, can I rely on that marketing research? Is that right? Would 80% of people buy at that price? Or is it nonsense? How confident can I be that 80% is what would happen if I put that product out to that price to the whole target market? So it's really about how confident I, because don't forget, confidence intervals is in relation to the marketing side of the specification. So I think it's really about confidence in sampling, confidence in research. Extrapolation is quite an interesting one, really, is and as you've all said in the live chat, it's all about these trends. Can you look to the future and predict data, predict changes, in particular around market size, growth of sales, growth of demand? Can you predict it off the back of historic trends? And usually it's by drawing a line, isn't it? And saying, well, here's the average growth, and what else do we know? But extrapolating historic trends. The issue with extrapolation, of course, which is why it could come up this year, is that a lot of historic trends have been thrown into confusion by the global pandemic and the lockdowns. If you look at a lot of data for 2020 and 2021, markets fell, sales fell by 50%, 90%. So where do you ignore the last 2 or 3 years? Do you go back to previous years? And also markets have changed. So I just think it's an evaluative point, really, which is that extrapolation in many markets has become a lot harder because market size, market growth rates have been so volatile. So that's why I wanted to touch on confidence intervals. I think it's mainly going to be in the context of market research. Doesn't have to be, but I think that's quite likely. And extrapolation. So, for example, you might be shown, because we know you're going to be asked to interpret data from a standard graphical object. We know that's the case for paper 2 because AQA have said so. It could be that there is a sort of a line or maybe a bar chart, and you're asked to extrapolate or comment on someone's assumption about whether that growth will continue. So that's extrapolation. Good stuff. Okay, enough of that. Let's do another one. What's the difference? Quick one, this one. Economists in the room, look away. What's the difference between fiscal policy and monetary policy? Somebody's saying that extrapolation, confidence intervals, all that kind of stuff isn't on the advanced information. It definitely is, folks. It definitely is. All of marketing is in paper 2, all potentially examinable. So that's why we're just doing a little bit more on that today. Yeah, there we go. Loads of great examples coming in. I'm just going to stick down on the screen because basically everyone in the live chat, as you can see if you're on the live chat, is writing what I've written down here. So as Armand has pointed out, monetary policy, it's about interest rates, it's about money supply, in particular the interest rate. That's the most important thing from a business, A-level business point of view. But it's set by the Bank of England, not by the government, but the government set objectives for the Bank of England Monetary Policy Committee to try to achieve. Whereas fiscal policy, it's in the hands of the politicians, isn't it? The Chancellor of the Exchequer. It's the way that they set tax both on consumers as well as businesses. So, for example, this week we've had he wouldn't admit it, it was called that, but it's a windfall tax on the energy businesses, higher level of taxation on businesses, as well as some fiscal policies, in this case, some energy rebates and grants to help consumers. So fiscal policy and monetary policy is one of the few parts of 3.7 that is examinable in paper 2. Yeah, paper 2. Good stuff. Right, well done. And what have we got next? I think we've got one more of these. Hopefully these are useful because I think we're covering quite a lot of ground tonight. As I say, we're going to come back to calculations and quantitative skills in a session before paper 2. Last one I think of these. What's the difference between strategic planning and contingency planning? What do you think? Yeah, exchange rates aren't monetary policy, but they are examinable. So exchange rates is just the operation of the currency markets. So that is examinable, along with interest rates, economic growth, inflation, and fiscal and monetary policy are the elements in the specification. Okay, so Ben's saying contingency planning, planning for the worst. Yeah. So I'm just saying a backup plan in case something goes wrong. Neve's saying planning for unforeseen circumstances. What about strategic planning? Here we go. I like that response there from Kate. That's a good one. Yeah, strategic planning is defining a business's direction, whereas contingency planning is planning for an unforeseen event. Superb stuff. Excellent. Let's have a quick look. A quick reminder here. We've got 10 minutes to go after this on a quick mini case study. So yeah, strategic planning is the normal planning process that a lot of businesses go through. It could be informal, it could be very formal, but it's about setting, as was said in the as Kate said in the live chat there, it's about setting the direction for the business. What are the goals for the business, the objectives, the corporate objectives, the business objectives, and then what flows from that is functional plans, the marketing plan, for example. And don't forget, there's a difference between planned strategy, a formal strategic planning process every 3 years, and emergent strategy. Of course, it was examined as a multiple choice question in paper 1, but it could come back again. It could easily be examined again. Just because it's in paper 1 doesn't mean it can't appear again in paper 2 or paper 3. Contingency planning is managing for risk, isn't it? It's, can you predict things that could go wrong and getting ready for them? What would we do if all of our systems broke down, for example? You've got to have a plan for that, haven't you? But also, it's preparing for how, as an organisation, we might respond to unexpected, unwelcome events. For example, bad publicity arising from something. So it's all of those kind of things. It's about managing your risk. And that's an important difference between the two. So hopefully that's useful. But yeah, well done on the live chat. Some really good understanding there of the difference between the two, which is very encouraging. So just to finish off with, I thought we'd spend 10 minutes having a quick look at a couple of 4-mark questions. And what I'm going to do is I'm going to use a mini case study that I wrote yesterday, I think yesterday morning. I've just uploaded it to the Grade Booster course. I'm pretty sure I've made it available as to preview enrollees as well. So if you just log into the Grade Booster course, hopefully you're already enrolled on it. But if not, enroll on a preview basis and go to the files section, the download section, and download one of the many paper 2 case studies there now called Handy Hotels. And I just wanted to use this just to show you a little example of these questions that are now appearing in paper 2, the 4-mark questions. So I've put it on the screen here so you can read the case study if for whatever reason you don't want to go download it. So let's just spend a minute or two just looking through the case study, and then I'm just going to show you a couple of 4-mark questions and just get your thoughts on those, and also give you an example of how potentially to respond to them. So this has been, Handy Hotels has been written with paper 2 this year in mind, along with Friendly Foods and JW Bakery, which are also there. Handy Hotels, HHL, operates a chain of 50 hotels employing over 7,000 staff, around 10,000 hotel rooms. The hotels are mainly located in seaside resorts like Blackpool and Scarborough, and tourist destinations such as York and Edinburgh. The hotels mainly attract groups of older people, so that's not me, that's not you, it's older people staying as part of a coach tour. Demand for coach tours in the UK has been in steady decline in the last 10 years. Due to their low room prices, the hotels are also popular with groups of young adults at weekends celebrating events such as hen parties. HHL is rated the UK's worst hotel chain by a popular online consumer reviews website. I wonder which one that could be. A summary of recent customer feedback is shown in Appendix A, so I'll show you that in a second. Results from a recent survey of all employees by the HR department is shown in Appendix C. So a classic paper 2. You've got 3 or 4 appendices, and I'll come on to how paper 2 is structured with those. Management are considering outsourcing certain hotel services to improve customer satisfaction. It's proposed the hotel cleaning will be done by local cleaning companies, and the restaurants will be supplied by a leading national catering business with a strong reputation. If the proposed outsourcing goes ahead, around 2,000 employees will be made redundant. You can just imagine, as Tilly suggests, what this hotel chain is like and what's like when you open the door walking into the room. So there's our mini case study, and of course that's been written to enable us to write a series of questions. Although I noticed on the download just now that there's a question on quality assurance and quality control in there, and needs to get rid of because that's not examinable in paper 2 this year. So there's our Appendix A, and we're not going to spend too long on this now, but if you look at the questions I've set, that does encourage you to think about what the data says there in terms of the percentage of people, and also the sample size, 26,000 customer reviews. So you could potentially bring in reference to the fact that, you know, from a sort of confidence point of view, it's quite likely that this selection, this 26,000 reviews, is representative of the overall population of people who've had the pleasure to stay at HHL hotels. And you can see what percentage thought that the room was clean compared with very clean, and also about the facilities. So that's in there. And also we've got Appendix C, which we're going to just focus on here. So just look at that data there. Don't forget with paddles, we can sometimes interpret the data. We can sometimes use the data to draw out key features. So these are the percentage of employees surveyed who agreed with the statements: I feel secure in my job, 12%. I feel part of a team, 24%. I am paid fairly for the work I do, and 2% said my hotel manager regularly asks about my well-being at work. Now, there we go. So a little bit of an overview of that case study, but I do encourage you to use it to practice on picking the demands of all the various questions. So here is a 4-mark question. So over to you, just for half a minute or so. How would you respond to that? So we know that these 4-mark explain questions are starting to appear in paper 2, in the same way that they're starting to add little calculation questions for each case study, not just the first one. So firstly, give me a reason why 12% of employees feel secure in their job, but also how would you respond to that? How would you structure your response to that? What do you think? Have a go for 30 seconds to a minute or so. Maybe I'll try to type a few of the responses. I'll show a few of the responses on the screen. And there are lots of potential answers to this. So I think it's more about making use of the information either in the appendix or in the narrative or the text that you're going to see. I'll pick out a few examples as they're coming in, not saying these are any better or worse than any others, but some really good responses coming in. So let's get a few of those on the screen. So one nice response there pointing to a bit of Maslow, but basically explaining that the safety needs aren't being met. There's uncertainty around the potential outsourcing. The image picking up some other parts of the data there about the approach to management of those people. Millie's picking up the potential source of any uncertainty. Mawarda's picking up the fact that the business isn't doing well and has a very poor reputation in the marketplace. Yeah, there's some great answers coming in here. This is great, superb stuff. Gracie's pointing out the textual information we're given about the potential redundancies. Yeah, great response here from Hannah. Another great response. Lots of them coming in here, pointing out that the business can't be doing well, can it? Demand is falling. The core market, which is coach tours, is falling. Yeah, fantastic stuff. Great stuff. That's great. That's very encouraging. So what you've all done is you've all picked out some information, some evidence from the case study, and you've started to apply it. Because don't forget, 4 marks, there's no marks for analysis in a 4-mark question. So it's just knowledge and application. But with an explain question, it's quite hard to explain without analysing. So I wouldn't worry too much about saying, well, I don't need to, if there's no marks for analysis, I'm not going to analyse. Explain, and I know the examiners have had this debate about the 4-mark question, but there aren't any marks for analysis, as I understand it, in a 4-marker. It is knowledge and application. So it needs 1 point being explained, but ideally dipping into the case study to help support the point, really. So I wouldn't worry too much about the fact that there aren't any analysis marks. It's just, it's the same old thing. We just want to explain how and why employees might not be feeling, or not many employees might be feeling insecure. If you get the idea. Here's a go. I had a go at this, and I've had this marked, and it's okay. It's 4. But really, just to show, I mean, what I tried to do here is just to pick a couple of pieces of information out, the context, the situation of the business, to explain why only 12% might be feeling secure. In other words, 88% are not feeling secure. So one likely reason is that management at type it right, can't even say it. Management at HHL do not seem to value the role employees play in meeting the needs of hotel guests. Just 8% of employees feel their work is fairly rewarded. 3 out of 4 don't feel part of a team. This suggests that management see and treat employees as more of a cost than an asset. So consequently, you're not going to be surprised if you hear of job cuts, and that's the reason why you're not going to feel secure in your job. You don't feel welcome, you don't feel valued, and the business isn't doing well. So why would you? So there we go, and I think that does it. I think that's okay. Okay, so get the idea. Let's just do one more, and this time it's a different appendix. So Appendix D showed some industry average numbers and HHL's data compared with the industry average. So over to you to have a quick go. Last activity for this live stream. Explain one consequence of HHL's average pay being below the industry average as shown in Appendix D. Over to you. Last 4-marker, last activity for this session. Yeah, 4 markers. It's only AO1 and AO2. So there's no application marks as such. However, to explain something, you kind of have to, you know what I mean? Explain something. What have we got here? So lots of good answers coming in here. Quite a few of you are going down the sort of motivation route, which I think is definitely, because don't forget it's a people business, so therefore we might be thinking extended marketing mix for other questions on this case study. So in particular, the people side of people, physical and process. So if you don't even pay, I mean, the hotel industry is low paid as it is, but to be paying 20% lower than the average suggests that you're probably not going to be attracting maybe experienced people, but certainly people who would work hard and be motivated probably can get a better deal in the hotel next door. Although Callum's pointing out that it means that they can charge less. It means if they're not paying as much as the industry average, they can charge less for the room and therefore maybe sell more rooms. Maybe it's a circular argument. Zoe's made a point about employers more likely to choose to work somewhere else. Labour turnover is likely to increase. This is superb stuff. Let's just have a quick look. What else we've got here? Yeah, Paul's making the link between poorly motivated, demotivated employees are going to be less productive, and probably the quality of what they do is going to suffer as a consequence. So superb stuff. You can definitely pick out. We just need one consequence. Let's see what I wrote here. So one consequence. Now, don't forget, you don't need to repeat the words of the question here. So you don't need to say one consequence of HHL's average pay being below the industry average as shown in Appendix D is. Don't write any of that nonsense. Just say one consequence. And I've just said likely to be continued low levels of customer service for guests. So don't forget, rather than for customers, we use such as seasoning. So don't say customers, say hotel guests, because it roots the answer in the hotel industry. That will sustain the poor reputation in the market and perhaps create even more 1- and 2-star customer reviews. So we're using the case study. And then a little bit of data manipulation there by paying 20% lower than the industry average. So we were told that HHL is 80% of the average, which is 20% lower, isn't it, than the industry average. So just a bit of manipulation of data. The business may struggle to recruit and retrain staff with the right skills and experience, which may continue to demotivate employees. And therefore, they're just not able to, for example, keep bedrooms clean and offer good quality room service. So again, I've just tried to use words such as seasoning to keep the answer, the response rooted in hotels. So talking about bedrooms clean, good quality room service. Now, there is some analysis in there, but I'm not worried about that because that answer explains a consequence of low pay. So I'm not going to try and eliminate analysis, because I think if you get into a mindset of using how and why, you can never go wrong. What do you think? Happy with those? Just in terms of the paper 2 format, of course, there was one 4-mark question last year, which I think was in the first case study. And what's interesting now is each case study has a calculation in it, sometimes a couple of calculations, but the second and the third case study have a mini calculation, or have done the last paper or two. So a 2-marker, a 3-marker, sometimes a 6-mark analysis question. So don't just expect it to be a 9 and a 16. It could be that the marks are split up just to break up the paper somewhat. Somebody saying in a 4-mark question you don't need to use a theory. You can if you want. Absolutely, you can. You can if you want, but don't feel the need to shoehorn lots of theories. It's a 4-mark question. So as long as you give a response that is rooted in the case study and draws on the data in the appendix, then that's all you need. That's all you need. Hopefully there'll be one, maybe even 2 full markers. Who knows? Right. What do we think? I think I am done. Yeah, that's it. Sorry, that's the last part of this particular session. We've covered quite a lot there actually, without doing any calculations whatsoever. So hopefully that's been useful. It might have picked out 1 or 2 terms or concepts or areas that you might want to top up your revision on in the days ahead. I've got a minute or two to answer any questions as we go. So, and as always, huge thanks for everyone who's joined us live for this session. The paper 2 format, quite a few people have asked about, is a little bit of a flexible feast. There's no mandated way that they have to ask the questions, but in basic terms, it's 3 mini case studies, with the first one likely to have 2 or 3, possibly 4 appendices. And typically what happens is that the calculations will be based on the appendices. They'll point you to the specific appendix that they would like you to use to calculate the data. For example, a 2 and a 3 marker, for example. But they will point you to the relevant appendix. So it's just a calculation. But there could easily be another 2 or 3 mark calculation question in one or both of the other 2 case studies. So don't think the calculations are done by the time you've done the first case study. They could appear in second and third case studies. And then you would normally expect there to be a 16 marker and a 9 marker in all 3 case studies. What's interesting though, if we look at the advanced information on quantitative skills, this is interesting. QS 8 is examinable in paper 2 using and interpreting quantitative and non-quantitative information in order to make decisions. So I read that as being there's going to be some kind of decision. Most likely, I think, not certain, but most likely to be in the first of the 3 case studies. and therefore we're going to be wanting to use the information in the appendices and the text to help us build our argument either for and against the decision. What have we got here? Any more questions about about the exam paper? Would be great. So people are asking about the 16 mark questions. So what we're going to do is we're doing a 16 mark special, aren't we, on Thursday, where we're going to go through 16 markers. We're going to do things. Well, firstly, we're going to do a 16 mark decision question. Surprise, surprise. It'll be based on one of the case studies that we've added to the Grade Booster course. And we're going to look at 16 mark open questions and spend a bit of time on those, because there are 2 of those in the exam paper. And those are 2 questions that 16 mark open questions is a question format that students have really struggled with in previous years. So lots of opportunity to get some bonus marks. I think Ryan's asking when's the next session. I think the next one is Thursday, and then obviously we're running some live streams on start next week, including a warm up on the night before. That could run for quite a while, but I think quite a few people found the warm up we did just before paper 1 quite useful, even if it was just as a confidence builder. Yeah, Kate's asking, can we go through the maths at some point? Absolutely, yeah. So I'll just remind myself there in the question. So we're going to do a paper 2 maths, paper 2 quantitative skills session, because as I say, I think it's as likely to be interpreting data like inventory control, sales charts, pie charts, that kind of stuff, as much as it is calculations, because we know there's no ratios and averages and fractions in this paper, but there are percentage changes, so that we'll do that. Yep. I think we've got about. We've still got 2 more to add. So I know that's at least 4 more live streams before paper 2, but still 2 to add on the schedule. So the best thing to do is just to make sure you subscribe to the YouTube channel, because as soon as we add them, as soon as we add the dates, you'll get a notification saying when the session is. Good stuff. I think we are just about done. Obviously, we'll cover things like timing, exam technique, and all that kind of stuff. And in particular, the specific exam technique for 9 markers and open questions, 16 markers, and decision questions in the next session. Right. Yes, and we are going to go over inventory control because why wouldn't you? And it's one of those areas that looks pretty likely. No guarantees, of course. Right, I think we are done. Superb stuff. Thanks for joining us, as always. Keep going, keep revising. Hopefully it's useful. Spread the word. Maybe catch you on our next live stream. So until then, see you later.